Today we're talking about, does VA loans, Veteran Affairs loans, accept private flood insurance? This might surprise you. So let's get started today. Hello, my name is Chris Green, president and owner of the Flood Insurance Guru. More than 12 years ago, I bought a house kind of like this in a flood zone, and I was told my premiums were going to be $3,000 a year when they should have been $300 a year. And I've been helping property owners like yourself the last 12 years overcome these same obstacles. Today, we're talking about VA loans, also called Veteran Affairs loans. Do they accept private flood insurance? So let's get straight to the point. The good news for you is, as of December 2022, Veteran Affairs loans do accept private flood insurance. Now, you may have to submit documentation to your bank, because we've seen in some situations where banks don't always accept it because they need to see the documentation of ruling from the federal government. Well, we've got that down here in this video for you, where we wrote a blog and we connected it directly to the bulletin from the federal government so that you can share that with them. So what is your bank going to require if you're taking out a VA loan and flood insurance is going to be required? Well, generally they're going to require one of two things: either the max loan amount that you're taking out, or the max coverage amount available through the federal government, which is going to be $250,000 from a residential building like this. Now, what if your bank requires more? Could they? They absolutely could on private. We have seen in situations that require more than $250,000. But many times what you can do is provide the bulletin from the federal government as well, stating the max coverage available amount through the federal government is only $250,000. But we do recommend covering the property for the full replacement cost. That's the actual cost to replace this thing if it was completely destroyed. Now, what about payments? Can you pay this at closing? If you're setting up a federal flood insurance program policy, you absolutely can. The mortgage company has 29 days to make the payment. If you're paying out of your pocket, though, you only have 10 days. So just remember that, because you could be dealing with a 30-day wait period if you're not careful. On the private side, some companies will allow this to be paid at closing and give you about 2 or 3 weeks to get it closed. Some will require payment up front the first year. So in order to get a better option, you may have to pay that payment up front the first year. So just be aware of that. Make sure to share, subscribe, and comment below. Let us know what you think. Let us know what other questions you want answered when it comes to flood insurance. You can also click up here in the corner of this video to learn the difference between the federal flood insurance program and private companies. My name is Chris Green, president of the Flood Insurance Guru, and I want to say thank you for watching today's video.